now what we're going to do, we're going to start looking at some of these market turbulence indicators. Right now I'm looking at the VIX versus the VVIX, and you can see just based on the general trend of how it's been moving, when that starts to rally, we're in a rally period in the stock market. You can see the big COVID drop, you can see the peak in the middle of 2021, and you can see the falling since 2021 into the middle and near end of 2022. And this comparison is just a simple way to understand if you're going to see a trending upward market or a trending downward market. But we see that it's starting to look upward, so it means that calm days are ahead in the market, which is fascinating. When we look again at the high beta, low beta ratio, this is on the weekly basis, you can see that the high beta is now taking over from a relative strength perspective against the low beta. So you just want to own the market. The only thing that you can see here is that there's a broad breadth thrust, which is essentially overtaking the market, which is different from what we've seen over the past 18 months or so. It looks much more closely when we look at the small caps and the mega caps, like we're seeing something that actually starting to reflect that period after the COVID crash in 2020, and what we saw is the ramp up into the middle of 2021. Now the only difference is that here with the small caps versus mega caps, the mega caps during the middle of 2021 and into 2022 really took the oxygen out of the entire market. The mega caps got bigger while the small caps started dropping in the middle of 2021. Even though people weren't paying attention, they were still too focused on the price of Tesla and Facebook and Amazon. But now it looks like things may be shifting back. Now looking again even at growth versus value, looking at growth, we can see that growth for the first time in a long time, almost a full year because it's been value oriented this entire time, is starting to show some relative strength. Which means that in the market, we can expect, based on the small caps starting to outperform, based on high beta starting to outperform, based on new growth, or growth starting to turn back up, and the market turbulence indicator starting to show the smooth sailing ahead. The market seems to be in a place where you can start to make some real active decisions to start buying the market and hopefully starting to generate a general return. Now I'm going to look at the same indicators, but on a daily basis. We can see that the VIX, again, it's shooting up, showing that there's going to be lower volatility. We can see this high beta versus low beta. You can see the ridiculous change that we've seen in this indicator since the beginning of 2023. Even looking at the small caps versus mega caps daily relative strength, we can see that it's starting to roll over, but the small caps has really been running. It's really been running since the end of 2022, the beginning of 2023. Now again, looking at the growth versus value relative strength on the daily, we can see how important this growth move has been since 2023 has started. It's completely reversed this value, which had started to really take over, even from the long term, but even in the shorter term for value recently in the market, as a factor was really one that you wanted to pay attention to. So we can see very quickly that the market has changed. It's looking more early cycle than late cycle. And it's no better to be found than when you're looking at Bitcoin. Now I want to look at Bitcoin because Bitcoin is one of the greatest ways to see the market expressing itself in terms of a risk tolerance. If you think about it, Bitcoin is the riskiest thing that exists on the planet to a certain extent. It has no cash flows, it's not controlled by anyone, there's no spokesman, no CEO, no anything except for the narrative and the belief of the group. So Bitcoin rallies in times where everything is getting bid. Now we look at Bitcoin, what we can see is that it's been essentially on a 5-month rolling negative return since January of 2022. And if we start to scroll down, what we'll see is that it's actually starting to show us the positive rolling return of 5 months on Bitcoin. On top of that, the price is clearly broken out above, I think, 22,000 and 23,000. We can see that it's starting to give a go long signal even on the weekly. The last time that Bitcoin, or the first time that Bitcoin gave a go long signal on a weekly, when you think about the pandemic, was going to be either way back in March of 2020, or if we really want to get the big signal, it was the one that we got in July of 2020, which was the true signal that you wanted to take and you wanted to buy. Same as when you see that 5-month rolling go positive. When you see the 5-month rolling go positive and you're getting a go long signal, you can see exactly how that signal would have fared during 2020 into 2021. You see it would have told you to get out around April of 2021, which was one of the individual highs at the time. That was when the speculation and the mania was really exuberant and we were really having a good time. Now, obviously that would have kept you in the market until a certain point, and then it would have gotten you back in as it really did hit its full high. This was the highest high, the $64,000 close from a weekly perspective in November of 2021. And we see again, we have a go long signal. We have the 5-month rolling, which is going positive for the first time. And we can see that we may even have a chance to look at the 15-month rolling positive. So now what we're going to do is we're going to look at it just on the daily basis. I'm going to go ahead and close these tabs just because they don't make any sense, because it's easier for you to understand just from a rolling return perspective. But when we look at Bitcoin on the daily perspective, we've had it go long since, it appears, 1/6 of 2023. So we've had a go long signal. We've seen price appreciation since around 16,000, and now Bitcoin is up over 23,000. That's the simple way of being able to look at what the rolling return is, get a simple go long signal from a trend following perspective, and just take it. But this is the type of action we're seeing in the market currently, which does not comply with the narrative that the Fed has, or that people are expecting of a well-timed and well-publicized recession. So now we're going to go ahead and take a quick look at Ethereum. Ethereum is going to be a little bit different, because obviously it's just as far on the risk curve as Bitcoin, but it's not necessarily the one that has the big name, the brand, all that kind of stuff. If we look at it on a weekly, we can see that Ethereum still has not given a go long signal similar to or it has not given a go long signal where Bitcoin has already given a go long signal. We can look back and see when the long signal was given for Bitcoin or Ethereum during COVID, same time around July of 2020. Now we're going to look at it on the daily, and we can see that on the daily, Ethereum has already given a go long signal, and we can see that rolling 1 month and rolling 3 month have gone positive as well, which are huge signals when you think about from an algorithmic standpoint about where the flow is going to come from into this space. We can see that you're getting a go long. We can see the price appreciating. We can see that an algo that is attuned to a 1 month look back period, a 3 week look back period, or a 3 month, now that it sees a positive return in Ethereum, is going to be able to place money there and continue to bid that up. This is just a quick little overview of how I look at the market from a Bitcoin and S&P sector.